Hi, welcome to the Market Alert for Monday, the 3rd of July 2023. So Friday we finished with the Nasdaq soaring to its best high in 40 years. Yield curve crashes to the most inverted ever. So this doesn't bode well. It certainly doesn't bode well down the line. Stocks saw yields and dollar fall after core PCE on month end, and the markets just exploded to the upside on Friday, which we'll look at in just a moment. Today is half-day trading. We've got Independence Day holidays tomorrow for the US, but today we've got ISM manufacturing, that's out, and also 3 p.m. So again, they'll just use the news to do what they've been doing for this last few weeks, and that's moving the market to the upside. Tomorrow there's US markets are closed, so it's going to be a thin day tomorrow, and then we get into some more news in the week. And of course, if you notice the ADP, that means that the non-farm payrolls, so that's the big one for the week. That's the one to look out for. We'll come back to the others as we go through the week. But the big one, Friday, non-farm payrolls, that's what the market will be waiting for after the Independence Day celebrations tomorrow. Right, let's kick off. Let's have a look at the Dow. Let's see what it did during Friday's session, along with all of the other markets. So as we can see here, the market blasting to the upside during Friday. We see an 89% retracement there, and also close to the high that we had across to the left there. Up on the overnight as well, continuing to make ground and get back to the all-time high. I'm just going to remove these numbers here for a second, because the one you want to target, or they're going to target today, is more likely to be the 3471. Where are we in the bigger picture? Well, we're still struggling to make an all-time high, which actually occurred back in January of 22. So it's been a while since the Dow made an all-time high, but as night follows day, no doubts we're going to get back to there before we see a massive correction in the market. And what do I mean by a massive correction? I'll show you in just a second. Let's have a look at the 30-minute chart. So on Friday, the market just piling up the numbers. It was from the off, and you can see all the way up to the close of trade, 383 points. For the Dow. It looks more than what it is actually on the Dow. It seems to be dragging behind everything else, so particularly compared to the S&P again, which we'll look at in just a moment. So yeah, the Dow moving higher, but the key to this is this: we have a new low in the implied volatility. And for those of you that don't know what the implied volatility is, it's a measurement of risk that is calculated by the option sellers, and the lower this goes, the more likely there is going to be an explosive move to the downside. What this says is complacency. The markets are fine. It's going to continue to go up. There's no risk in the markets at the moment. But as I know from 30 years of watching this and trading this and uncovering something back in 1994, that when the implied volatility gets down to multi-year lows, historic lows, then the underlying market will make a severe correction. And we can see that from the charts as we go back. If we look here, you'll see in the 6-month chart, we've got corrections even at 14%, but the lower the numbers, the bigger the correction. So let's go further back, and then we can see when we get into these areas of 9 and 10, this is back in 2018, then we get severe corrections. Of course, that one's a slight exaggeration because it was the pandemic, but where we've got all of these low numbers, you will see corrections. They may not look big on this chart, but there's several thousand points in the Dow where these corrections come, and also where we had a reworking of the lows in post-COVID. We never got anywhere near this level, this 10%. It was only coming down to 15, but we were still getting significant corrections when we got down to these levels. So to be back down at the 10% area and nearly back at all-time highs, there is something coming down the line as far as this is concerned. So 10.64 is... it's actually not 10.64. It's I didn't put that number on there. It's 10.01, isn't it? That we had, and of course we've got today half day, and tomorrow the market will be closed. But we may I don't know whether if it's half day today, we will get an implied figure for tomorrow. If the market's closed, we won't. So we could actually break like I've said before, it doesn't mean the market's going to fall out a bit tomorrow. It just means be warned that there is complacency in the market. And when you get that, then it's not unusual for a black swan event just to turn up and ruin the party. So like I say, just heed the warning on the upside. There is something coming down the line over the next either few days, weeks, or it could be a couple of months. And as we go into the summer, of course, we've got the vacations and everything else. So we could see this number continue to move lower. But I would have thought they'll try and run the Dow back to the all-time highs first before we see a correction. Okay, let's move on and have a look at the German DAX. German DAX also piling on the numbers on Friday. Massive move for the DAX that we've seen there. And we went straight through the 62% retracement, 78 and 89 are now on the upside. This is the all-time high to the left here. So let me just mark that up. So we've got it there, 16,427. Good non-farm payroll numbers this week. We go straight through all of this, and it's not that far away, is it? Let's just have a ballpark look at where we are. So from there up to the all-time high, which is around there. We're only talking 231 points. And on Friday, if we just go to the 30-minute chart and draw this in, you will see that we quite easily managed 222. So we're not that far away from going back to the all-time high on the German DAX as well in the daily chart. 200 points is no different than what we did on Friday. How would the market moved up like that during Friday? Who knows? But then as we go into the weekend, Fridays, if you go back statistically, the market goes up because they don't want to see finish the Friday with the market down and sort of uncertainty and indecision over the weekend. So it's not unusual to see that happen. So yeah, we've had the correction. As I said in the previous market alerts, it was oversold and it's been making its way back. So watch the 78 and 89 for this market. 30-minute chart. Say we came off the close on Friday, and that's how it just continued straight through the high. And we actually went through the R3 as well, and it's unusual. We did have a bit of hesitation, but it's unusual to continue higher through the R3. It didn't go up another. Well, it did go up another 100 points actually, which is, say, an unusual situation. We get to the R3. Where the market would normally trade sideways and then sort of make its way back. But on Friday, stranger things, market continued to the upside. So 1% where it didn't. It didn't really matter. I mean, the market was long and it was a matter of trading it long. 5-minute charts, we see this for Friday. Let's just drag the chart over and have a look. You can see it got a bit choppy towards the end of the trading session there. And also at 17:55 or around 4 o'clock. Is this 4:30 by any chance? Yes, it is. That's when the cash market closed. You can see how they bought back in there. But let's just move it over a bit more to the morning part of the trading session there. And you can see how we kicked off. It was just never ending. It just kept continuing to the upside. We had a 1-bar shakeout. And then they bought back in, and it was just the rest, they say, is history. It just went up. We had a couple of bars that closed below the 5-bar moving average, but on the whole, it was straight up and never looked back. And then in mid-morning, continued to move, having taken out the R3. We came back to have a look at it, as I said, in the 30-minute chart, but off we went once more in the afternoon. And that's because the Dow just piled on the numbers in the afternoon. And then overnight, which is always an interesting one, you can see that the market, every time it's come back to the high, they've taken it off the high and also the close of Friday, and continues to move higher at the moment as well, which you can see there. So the high is going to be a support for this market if prices do start to make a bit of a move to the downside. But at the moment, they're way above that high. And if we look at the daily charts, again, you can see that we've got the 78 and the 89 in that gun sight for the market to move higher there. So in the S&P 500, let's have a look at the monthly chart. Also heading for the all-time high, start of a new month today, but last month moving nicely to the upside. And in the daily chart on Friday, taking out the recent high of 4447, and in the 30-minute chart, moving strongly from the, you can see there from the high, trading up strongly, and just below Friday's high at the moment, but above the DP, above the close, and just needs to stay above that BRN there, 4450. FTSE 100 also moving up, and it's up on the overnight as well, moving strongly back to the upside all of a sudden after becoming oversold and having a bit of a shakeout. The market trading up to 62% is the next target. We can remove the downside ones for the time being. So 62, and in between that we've got the 50 MA, we've got the 200 MA at 78 and 89, so a bit sticky in this area if and when we get to it. 30-minute chart, market just moved up strongly there, about 70 points by the looks of things. Let's get a more accurate number to the close of the Dow, 143 there, so 143 points for the FTSE. Currencies, GBPJPY continuing to move higher again, monthly chart heading to 89 last month, the market piling on the points there. And say in the daily chart, just need to take out the high of Friday. In the 30-minute charts, we traded down to the low. What happens when we get to the low in these markets? They like to buy back, brought the market back up, pull back to the close and the DP, and then move the market up. Overnight, we've got the markets moving higher. We're about 62% retracement by the looks of things. Let's just have a look. Actually, we're 89 to this low. So 89% retracement, overbought, making our way back. Watch the close, the DP, and that 50 EMA. We could find support there for another move back to the upside. And in the pound, up on Friday as well, dollar down. You can see there we're stuck at 78% retracement at the moment. And in the 30-minute chart, another big move, same pattern there back to the close, and moving up all the way through Friday, and then trading sideways, stuck at the close at the moment. Needs to stay above this. If not, watch the DP, 200 MA and 50 EMA there. And in the US dollar, down on Friday, which you can see there, and down slightly on the overnight as well, as the hawkish sentiment disappeared during Friday. So in the metal, silver moving up on Friday, moving up on the overnight market at the moment as well, which you can see there, overnight just taking out the high. Don't worry, it'll be back down by lunchtime when the London metals market opens and fixes the price. They always fix it lower. And then going back to Friday, we came down, we did a correction, we were oversold, and then the market moving up. So we're through the high at the moment. Gold, well, it's trying to move high, just found a bit of support on Friday off that 200 MA, very important level that we spoke about in Friday's alerts, and in the 30-minute chart managing to drive higher during Friday, but hasn't taken out Friday's high as of yet. Okay, so that will do it for this one. Let's see what the market has in store today. Like I say, it's half-day trading for the US today. It's shut tomorrow, so the market's going to have to make its own direction tomorrow. But today, it's got a couple of news items to, again, if they come out positive, then they're going to drive the market again to the upside. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.